to look in the future. What would you do if you can go into the future and ask yourself questions? What do you do next? How do you grow your firm? How do you become the most relevant advisor to your clients? Well, luckily, we can just ask the time traveler himself, Paul Latham, and learn the knowledge we need at our firms to evolve new advisory services and become that most relevant advisor to our clients that we've been talking about. Now, Paul brings three remarkable things with him to help us on this journey. Number one, he's built a successful accounting practice in the UK, so he understands us accountants. In fact, he built his firm to an advisory powerhouse, which sold for $45 million back in 2001. Number two, he's taken the business public, building to a market value in excess of $400 million. So he understands what business owners need and value and what we as accountants need to provide to them. And finally, as I said, number three, and most important, we don't need to invent time travel. We can just ask Paul and learn from the transition he made 20 years ago in the UK into providing business advisory services. Because that's something that's the goal for all of us in 2020, without a doubt. As always, I'm Garrett Wagner, your entrepreneurial CPA channel host, ready to listen and learn and ask some questions from the legendary Paul Latham, Pay and Rock Solutions. Now, Paul, this is one of our special two-parters. We're going to dive into part two of the history of the competitive advantage. And last time we talked about, as we've talked about many times before, if you want to be relevant today, you want to be successful, you want to be seen by your clients, it's all about intangibles, both for us and for their clients. And you briefly mentioned at the end, there's three types of intangibles that really matter. And I know for me, intangibles are one of my favorite topics of all. So I'm excited to hear more about intangibles and how they can help us become relevant to our clients.
Yep. Hi, Garrett. Let me just get the screen up. Similar to you, I'm big on intangibles. As you just said, last episode, we went through the history of competitive advantage. And just giving a recap on that, we went from location, we went into the era of innovation, through mechanization, through management structures, into the era of quality. And here we are today. We're in the era of the intangibles. So, in the last episode, we learned to understand the importance today of intangibles. And, just as a sort of reminder, really, it's a fact that if you look at the average business value of all businesses in the 21st century, more than 80% of the average business value is intangible. Basically, that means, the asset is not on the balance sheet, which, by the way, is another way of saying that most accounts are more than 80% wrong. So there we have that history of competitive advantage. And as you said, at the end of the last episode, I said, but there are three sorts. We've got the gas, and we've got fluids, and we've got solid intangibles. So if you start with the gas, the gas is when something enters your head. I've got a good idea. That would be great. It would really help my business. And it's an incredibly important first step to have that intangible idea in your head. But obviously, you don't make any money from a gas intangible. Whilst it's knocking about in your head, we don't make any money. Fluids is where 95% of the people listening to this webinar, that's where they'll be. Fluid intangibles. It's how most smaller businesses work, and whether that's a small CPA or their smaller clients. And when I'm saying smaller, I probably mean businesses with revenues of less than, say, 20 million. On the whole, the way they work with their intangibles is a fluid style. They employ or use clever people in their business. Often those clever people includes the business owner themselves, and those clever people solve problems for their clients, and they tend to do it one by one, and they tend to have no system, and they tend to have no process. And what they're good for is generating income, but what they're bad for is building capital value. And if you think about an accounting firm, just think about any accounting firm that you can think of. Imagine, I don't know, let's just pick an example of a skill. So you've got a partner there who's really, really good at solving tax problems. He generates income, or he or she generates income while they're with that partnership. What happens when they walk out of the door? What happens the day they retire? And basically, the brains of that person walk out the door with them. In other words, the business doesn't own the intangible, it's the person, and it's the clever person, and they're sort of renting their talent through salaries and so on to the business. So the business doesn't own the intangible. It's fluid. It's good for generating income. And as it says there, that's really because these clever people are employed. They're not owned by the business, and their talent does not increase the capital value of the business. The goal of anyone listening to this webinar should be to recognize, first of all, that intangibles matter, and then secondly, recognize that the only intangibles that really matter are solid intangibles. If you want to build capital value, you need to build solid intangibles. And that means that what you have to do is take those clever people, and instead of solving the problem or just solving one-off client problems or customer problems, you get those clever people, usually using technology, to create systems and processes that are owned by the business. And once that system and process is owned by the business, then it can be scaled and leveraged, but it's an asset of the business. So, it's a really simplistic example. We talked in previous episodes about the importance of diagnostics. Well, if I'm a clever person, I can ask those questions of the individual. But if we create a system in the business that automatically asks those questions, the asset is owned by the business, not by the individual. And it's this whole scaling and leveraging. And essentially, this whole area here of, first of all, taking the client through the history of competitive advantage so they do understand why intangibles matter. And then secondly, taking them through this little transition between the three sorts of intangibles. Basically, if you're an advisor, a business advisor, you must be, it says there should be, I think actually I should have probably said must be, pointing your business owner clients to say, it's not good enough to have fluid intangibles. They need to become solid. They need to be so solid that you can almost touch them. Whether it's a diagnostic or a box of product or whatever it may be, you have to be able to almost touch them. And that's why I've talked in previous episodes about creating boxes of service product. I sometimes call them Surprods or whatever, some combination of service and product, because when you create boxes of service product, it basically means that you can better define the service. It means you can better shape the service, and it means you better solidify the service. And what you've done is you've taken that intangible competitive advantage and turned it into an asset of the business that the business owns and can sell and will generate future capital value from, and that's why it matters.
Sorry, and unmute myself there. What can I say?
I wish I could mute myself sometimes, Garrett.
Right? You gotta take turns. You can mute yourself now while I'm talking. But Paul, one of the things that I see a lot on that framework there is like CPA firms that are trying to make this transition. They got one part of it that thinks they do it, but it's totally non-solidified intangible. They kind of show up and just kind of like wing it. And we've talked about this before, and that's a prime example for firms. You're not really there yet. There's no value behind that. There's no repeatable service offering behind that. Mm-hmm. Once that partner goes, no one else is going to do that. That client might stick around for the first year, but they're going to say, wow, this is just nothing like I was getting before.
Yeah. And by the way, although the accountant can see that inside their own business, and it's pretty obvious, that clever tax person goes and they take all their knowledge with them, and they can see that staring them in front of their face. It's exactly the same for every single one of their clients, because there's always a clever person. If you first of all recognize that most of their clients are no longer manufacturing businesses, they're service-related businesses, solving problems for whatever industry they're in, that same issue with the tax partner leaving is exactly the same in every single client they have. Every single client they have, there is a clever person providing fluid solutions. You can spend your entire working life working with your clients to help them solidify, and you should be. And there's a massive, massive opportunity there to be helping your business owner clients, not just your own business, but your business owner clients. It's staring you in the face. It's 80% of the business value. And most accountants completely ignore it because they're not really focusing on the right things.
Yeah, they're focusing on the debits and credits, the tax return. This is, like ultimately, if you got a smart person, they tend to be really busy because they're the smart person doing it all. And that's why this appeals to them, because you're going to do something. You're going to help them solidify those intangibles, have a more successful business and a better life, because they're not just running around. You see it a lot, like the chicken with their head cut off. They're going from one problem to the next because they're the only one that can do it.
Yeah. I mean, by the way, at the beginning of every episode, Garrett, you talk about, building an advisory powerhouse, $45 million. The reason why somebody paid $45 million, I mean, not the only reason, but a major reason, was that they recognized that the people were relatively unimportant in our business. And it was the system, what they were buying was the system that produced the revenue. That's what they were buying. And if you didn't have a system, it was worthless.
And that's what we see with all our businesses. And that's why we can help our clients be successful and have a business that has more value than it does today. Solidify those intangibles. That's why the history competitive advantage is so important right now. We move past the debits and credits. We become most relevant to our clients. We talk about things like intangibles. That's what gets them excited. Not debits and credits, not their bank rec. Building a more successful business with better value. So Paul, thank you as always for this amazing insight. I always love when we get to talk about intangibles. Something else we talk about intangibles all the time. When we talk about for CPA firms, just like this, you don't realize how non-solid your intangibles are. And we encourage you to take the biz survey. And that's going to measure what those intangibles look like, how solid they are. See where you stand today. See how ready you are for the future. There's a link below. I encourage you to click on it and check it out. Don't forget, you can click to subscribe to the YouTube channel. Stay up to date on all the newest episodes. And as always, we challenge you to take action to change the world and invest in yourself every day.